Okay, guys, so welcome back to the channel. Matt here with Green Bar Trading, and this is going to be another weekly watch list video. It's very early on a Saturday morning, but I wanted to come in while all this information is really still fresh on our minds and, really how to prepare for the future in the markets. Because what we saw this past Friday when Powell was speaking from Jackson Hole is obviously a huge market sell-off. So before I get started, hit the thumbs up for the video. And if you're new, subscribe. So getting into the Powell speech and what I think was the reason for the sell-off. In the last FOMC meeting back in July, Powell struck a very dovish speech, which a lot of investors, market participants, they saw as almost a pivot where they were going to, start cutting rates sooner than expected and maybe even less rate hikes. And that sent the rally that we saw that started in July go even further. So what happened on Friday was a total 180. It was a way more hawkish speech, something where, we're going to hold rates higher longer. I think they're really trying to take the air out of the market, and they saw a very hot labor market. And he said it's going to take a lot more than just seeing a couple of months of better inflation numbers. So everything that he talked about was they're going to keep the foot on the gas, which they should. This labor market is very, very tight, and that can really lead to high inflation. They have to do what they have to do right now. So it's good for the future, but we saw that sell off on Friday. So as market participants started to reevaluate where the Fed was going, because now the most important thing, which we saw in 2020, 2021, and now in 2022, but for whatever reason, people forget, is don't fight the Fed. So in 2020 and 2021, when we saw equity prices just going through the roof, the Fed was so easy with their monetary policy. And, that is what caused a lot of this inflation, but it sent the equity market, through the roof. People had great years in 2020, 2021, until the Fed started to tighten. And when that happens, you don't want to fight that. So that's what we're seeing right now. We're seeing a bit of weakness in the markets. And by a bit, that was a very bad day on Friday. So getting right into it, why don't we start here? And that's just a little backstory about, you're probably going to hear a million different reasons for things to happen. They always love to tell you after the fact, and they'll explain exactly why something happened. But nobody can ever tell you before. We happened to hit another perfect weekly watch list last week. So, like I said, predicting market direction is just about the most impossible thing, but we've been doing an absolute amazing job, and in our Discord also. So these are the relative performances for the week, for the day, for the month. And what we said starting 2 weeks ago was buy energy, was buy oil. Oil prices were going to go up. Energy, XLE, was going to go up. And that was a huge outperformer on a week that we saw technology down 5%. Absolutely crushing week for the overall markets. but energy outperformed, and that was one of the stocks, XLE, and all the oil stocks was on our weekly watch list from last week. Started a couple of weeks ago after it pulled back. The 1 day relative performance far outperformed Friday's disaster. The heat map, we have Google down 5%, Microsoft, Apple, just Amazon, all the big names crushed. This is the economic calendar for the week, starting here on Monday. None scheduled. That's a good thing. Tuesday, we have the Fed, New York Fed President John Williams is speaking at 11 a.m. When you're trading, I cannot stress this enough, you need to know when these times are, because the market, the algorithms that are trading are going to know. So you need to know. If you're in a trade, maybe pull it off and then put it back on afterwards. So that's on Tuesday. Wednesday, we have Loretta Mester speaking at 8 a.m. And then at 6:30, far after the market closes, Bostic is speaking. So a lot of Fed talking. And then here on Friday, we have the NFPs. This is the payroll. I mean, this is the jobs numbers that, really jump-started the market when we saw these very hot numbers last month. So Friday, big NFP. We'll see the unemployment rate. What the Fed wants to start to see, and it's not great for people that are working. They want to see the unemployment rate going up. I know that sounds weird, but that's how they believe inflation will start to come down. So unemployment rate, they want to see it go up. The payrolls, they want to see not beat like we saw last month, but start to come on down. And the labor force participation rate, they want to see come up. So these are the things we're going to be watching for this week. Last week was just jam-packed, filled with stuff. Friday, with the inflation numbers, it started to come down. That's a good sign. But like he said during the speech, it's going to take a lot more time. So that's that. That's the economic calendar. And let's take a look here. First have to do my victory lap. So this has been a normal occurrence on these weekly watch list videos. These were the picks from last week, and every single one just about went exactly to target. So very, very solid research last week. Put together these things. Who would know what was going to happen in the market? But what we see and what we do is the technical analysis. The technicals are what tell us what might happen. So rejections at 200 moving averages. These are all things that we look at. We look at gap fill potential. This happened to fill the gap right here perfectly. Meta was hitting its head on resistance. This has pulled on back. So XLF is another one. We had this double top here at resistance. This has pulled on back. So anyway, we're going to be looking at that. Apple was a really good call right here. This one, I think, closed at about 163-ish. So that was a great call there. Just XLE, this was our best call. This one is currently around 84, if I'm not mistaken, but we were making a series of higher lows and higher highs. That breakout towards previous highs, that's what we're expecting in the overall, by the end of the year. I still think, this went up so much this past week. You're only going to expect a little bit of a pullback before that next leg higher. So if you missed the trade for the last 2 weeks, I would be taking profit before it starts to pull on back. So that's XLE. Going to our favorite, the SPY, our compass. And this is what I like to look at. So we're going to start on the daily chart. And what do we see? I see a bunch of distribution days. We had brought this up last week. What a distribution day is a day that's down 0.2% or more on higher volume than the day before. So what we started to see here, and what was a clear indication of what might have come and what did come, was back here on the 19th, and then again on the Monday, the 22nd. We saw 2 distribution days on Friday, and then again on Monday, and then a huge distribution day right here on Friday of this week that just happened yesterday. The more of these days put together, then you start to understand that institutional investors are dumping shares. So the hints were these 2 distribution days right here. So they got out at the 200 moving average, and so many stocks, and I'm going to show you exactly this. So many stocks had that run up, tapped the 200-day moving average, and then pulled on back. And what we're pulling on back to on a lot of stocks is this 50-day moving average. So we really have to watch what happens at this. If the 50-day moving average does not hold up on the S&P 500, which is right here, just under 4,000, if that doesn't hold up, we're going lower. So we need to see it hold up. I think we could see a bounce though, because as you can see, the 50-day moving average is curving upwards. A lot of times when that's happening and something is curving upwards, you'll get a bounce initially. Just like what we saw on the 200-day moving average that was curving down. If price is coming into that curving down, a lot of times you'll see that real rejection. So I'm thinking we're going to see a bounce at the 50-day moving average. We're going to have to see how things trade around that area, but that's just my thoughts looking at this from this technical perspective. So that's the S&P 500. Looking at it on the weekly chart doesn't look great, obviously. Same thing happened here. Rejection at this downtrend line. We saw further weakness once it broke the 50, broke the 20, and this is all on the weekly chart, and then just saw further weakness. Again, huge rejection right here at the downtrend line, and now just totally breaking down. This is where the 50-day moving average is on the daily chart. Would love to see a bounce there, at least initially. So if you see a sell-off at the beginning of the week, it could possibly be a dip buy opportunity. But before we do that, you really have to start to see these distribution days go away. On the Qs, looking at it on the daily chart, this is what I see. So rejection, this was last week's weekly watch list. You have support, resistance, and it could not break through here. This is the day we made the video, and we sold off that Monday, came back into resistance, and then sold off, obviously, on Friday. Now we're coming back down to this 50-day moving average, which is at 303. Very close to that right now. We're also close to this ascending support trend line, and that happens to be right here. So we're going to know pretty quickly how trading is here. But like I said, if you look at the volume profile, huge distribution day on Friday. So as far as the volume looks, when you see high volume like this, that's a lot of institutional selling. And they usually sell before things get a lot worse. Just like they were buying here, they started to sell here. We started to rack up those days, and then we're coming back down. So the moral of the story, markets got extended, coming back to the 50-day moving average. That's on the Qs. The Dow Jones, same thing. Rejection at the 200, coming back down to the 50-day moving average. We should know pretty quickly how strong this market can hold up. That's at 320.41. So if that breaks, you have further weakness. There's really little support below this. So just got to wait and see with that one, because the IWM, another rejection at the 200. And this had support here at about 190, just about this area. And you can see here, because this is something I trade on a daily basis, it was support, 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 right? Support, it was resistance here. And then we broke that very clearly on Friday. So this, again, from the 200, possibly down to the 50 moving average, which is at 182. And that's a very big move for the Russell. So we'll see what happens there. But that just broke support on Friday on heavier volume. Not, crazy volume like you see here, but still another distribution day for the Russell. So that's the IWM. A couple of things I want to show you. These rejections at the 200, they did not just happen on the Russell, the SPY, the Dow. They happened on some other stocks. DraftKings, clear rejection at the 200, coming back to the 50. Home Depot, clear rejection at the 200, just about now at the 50. That's Home Depot. Amazon, another one, clear rejection at the 200, just like we saw back here, coming back down. Now this one is on our watch list again for that gap fill, which we called last week, down to this 125 area, and it's just around where the 50-day moving average is. So this one, possibly short, maybe a bounce here. Just have to wait and see how things trade around these 50-day moving averages. I can't stress that enough this week. And then we see Microsoft, another one, clear rejection at the 200, now closed under the 50-day moving average. If the market continues to sell off, this is going to look pretty ugly because this already closed under the 50-day moving average. So that's Microsoft. Let's get to our stocks that we're watching for the week. Now the VIX, we'll start here because I'm going to do the UVXY after this. We broke over 25 and we broke over this 200 moving average right here. So when things start to do this and then they break back out, like we saw here, come under the 200, break back out. If this comes up towards the highs for the year, the market is going to take a nosedive. It doesn't mean that it has to happen immediately, but what I can see happening is another bad day, maybe a couple of bad days, and then a little bit of a relief. Because like we know in the markets, they don't just go up forever and they don't just go down forever. So you need to know where there might be support. So that's the VIX. Not looking great on that candle on the daily chart. Now, UVXY. This one, I think we can take a play long back to the 200. So that's where we see these sort of resistance. We based out, came up, and then on Friday saw a very big move. So if we continue to see market weakness, the UVXY, which is the Ultra VIX short-term futures ETF, can see this one move pretty big like we saw here. So that's why that one is on our watch list. XLU is the utilities ETF. Now, I can see this one as very overbought and possibly, people that had traded this here and bought it here for a nice trade for the year. I think they can start to take a lot of profits like we saw here, and this could come way back down. So I'm short the utilities, which is XLU. I think we're going to see some more traders that had benefited from here start to take this trade off. So that's XLU. Uber. We have another rejection at the 200. And I see gap fill here to about 2463-ish, 25, let's call it, right around that 50-day moving average. Just like I showed you guys, another stock here that rejected the 200 and is coming back down. So Uber short to gap fill. Google's up next. Clear trading range. Kind of broke out here, trapped some people, and then sold off. So what can we expect? Maybe price to come back down to the 105 area. Just about. That would be this trading range right here. So one more bad day, 2 more bad days in the market, and you can see that this can test this spot right here, which should be support. But we'll see if that happens. But that's under the 50-day moving average right now. So looking pretty weak on Google. Amazon kind of went over before, but gap fill here to the 50. And then Apple, we're gonna end with Apple because this one was a great call right here. This was the high, all-time highs here at just about 183. When we had a rally, because Apple tends to really rally hard for many, many days in a row and then come on back down. Could not make a higher high here, even though a lot of people were thinking it's got to be able to get, 3 more points. Well, it didn't. Same thing here. Oh, I think we're going to at least retest these highs. Could not see that 3 more points. We have a down trend line and then saw the rejection. On Friday, big volume, a lot of selling, and now this could be that next leg lower. If it is, then you're going to see the overall market. This is like 7-8% of the SPY. So, this has the potential of coming back down here. If it does, like I said, the market will as well. So this was on our watch list to go short, to take profits right in this area. So if you did, that's great. The video was made here when it was in the 170s. That got you a very nice winner. So I think that's just about it. Please hit the thumbs up for the video, and I appreciate you guys watching. And yeah, we'll see you back on the next one. Take care, guys.